Hello and welcome, as today's date comes in that of Wednesday, 29th day of July 2020. My name is Derek. This is the Money Charts channel where, like always, all bets, trades, and of the like, well, that's within each's own risk and their own reward. For myself, risk reward management is always job number one. And it's true when I say that, and always being aware of your bets, what you're able to win, whichever way you're doing it, say in markets. If you sell at this level, you sell this much here, this is going to add this much, I'll be able to do this from this point. And even in trading, anytime I buy anything, I always can answer the question of my distribution strategy. Part of, again, in the risk reward. And for bankroll management, my number one way of playing, any kind of game, whether you're trading, whether you're betting sports, fantasy, poker, any of that kind of stuff, is to play your bankroll up and down within it. As losses come in, you reduce stakes. And when you win, you increase stakes and you bet more in different ways. Meaning I bet more on up moves and less is going down. A lot of people, I think, do the opposite in that when they lose and they notice they're just having some bad runs or whatever, they start tilting and maybe sometimes bet more and even really make bad bets at times. I've seen that a lot in the poker world more than anything. Even sports betting, I've seen it a lot. And myself, as a young player trader, I've done some of those things, not much, but I have done some. And sometimes it worked, but more times than not, it didn't. And then you also got the situation on wins where people got a decent sized win and they're just like, oh wow, and they just cash it and they're happy and they leave. And I can never do that, in the sense of I'm always going to be looking to try to parlay victories further. Okay, so that's enough about that. I think that's important information as it is. Again, why I like to bring it up. So I'm looking at silver here, which has had just a spectacular, beautiful run from these, whatever you want to call these lows at like $12. Because come on, you couldn't buy it at 12. But can you buy it at 24 today? No. That's always going to be a little bit higher on that market. Now, the percentage is higher, is a much, much lower than it was now, but that's because it got way out of hand in here. And it's still kind of out of hand as far as some people may be are concerned. This thing has got the chances, the likelihood of monster gains that you could be talking about. Yeah, I'm buying now at like $30 an ounce or whatever it is that you're buying the real silver at. And then it's like, yep, silver's like 40, 60, 81, 120, 130 kind of deal. And you're like, yep, glad I bought it at that 30 price when it was 24. So it could very easily turn into that. Not saying that it will, but I wouldn't be surprised if that next target level of about $1.30 comes into play relatively soon on the long-term speak. Long-term speak being maybe by Christmas, into sometime next year, into the spring of next year. Even the following Christmas on a chug-along. A chug-along means lots of different higher highs and higher lows, maybe 50, resist for a bit. Then it breaks it to 77, pulls back, and then we'd have that move, and that takes 18 months, whatever. But as it goes for the current bit, I got these lines in here, and these lines represent Fibonacci from this high to this low. We've already managed to get above the $20.40 level, which was most certainly resistance. And that's the breaker. And when it does so, I'm looking for a move to next key level. Next key level comes in at 28.5. So it's not even close. It's not even there yet. But that's telling me most likely this move is not over. We have a very steadily, newly rising 18 average. It's increasing the 18 average highs area here. So if there's going to be any pullbacks, it's definitely an area I'd be looking for support. But this thing could be rising up where support could be found at like 22, 23 or something in this area based on the movement of this trend. As far as the monthly chart is concerned, there is a chance we're going to have the best percentage month ever. It's got to, if it makes it to the 28, we could be talking about it. And it's got to do it fast. It's got to do it by Friday because Friday is the end of the month. So it's probably not. Right now it's up 32%, 33. So some previous good months. Oh, back in 2011, this month is 27.5. So already baiting that particular month. And that was the best month of the bunch in here. What do we have for this green candle month? Oh, it's 17.7. The percentage is right in here. And this, 18%, that's child's play as far as, we got 18. They've got a lot of 18s. That's a key common number. But what about way back when? And this isn't the time, this isn't the chart. So we'll get to that right now. I wanted to prelude into this other Fibonacci later on, which I'll get to that in a bit. But because of the fact of, we're looking at the best month. Well, let's just take a look in here. We got a good one here. Good. What's this one in here? We got 54.36, which is the month of December 79. 2 pause months before that, but in September, 58.27. 54, 58. This month here, 34. And this goes back to like 19, I don't think there's anything, maybe 68 or 69. I have the date. I don't think it was though. But if we can get like a 60% move, that's all it needs. So to me, it's just a matter of time before silver has a fantastically amazing month that will just blow a bar that is extremely easy to beat. Thus, will most likely set a more realistically tougher bar. Because to only go up like 50-ish% in 1 month to me is that's just a low bar for the best when we're looking at it from that nature. These Fibonacci levels are represented via that of this low and this high. This is a microscopic-ish number. This is a 61.8% down retracement, 38.2, 23.6, about 14%, a 10%, and this is about a 7% retracement. So how are these numbers reacting within this current move? Well, it did not hit this level here. So within the retracement, I got mixed signals. But it's pretty simple either way. If this situation in here, this little congestion in here fails, then we most likely are going to not only test this, but go down to 21.5 or so. That is a very likely situation. But if it manages to escape this, and I can see this by it holding and staying above like 24.75 up to 25.25 even, and it just holds and stays there for a while. You see it accelerating north of 25.5, then I'm going to be looking at that 28.5 level coming soon. So that's on the either or situation when I'm viewing this via that of the short-term time frame. And because of what I mentioned about the move looking at like 28, I believe all sell-offs are going to be guilty until proven innocent. And I don't think it'll be proven innocent, but we'll see if it does. In that, when we look at this on the long term, definitely, if it'll come back to 21.72, yeah, I still think that's going to be guilty. And maybe it comes back down to 19. I don't think it will actually, but it could. That's like the must-hold area. That would be a really interesting, sick move. But, I mean, who knows? I guess you could say that would be a 38.2% correction. I don't think we'll get a 38.2 style correction until we do at least hit that 28.5 level. But yeah, that's the movement's right in the middle of this. You can see how well the resistance came in here. It hasn't really been supporting this level. It's been supporting an established level much higher. The lower end at about 24.05, and more consistently at about 24.25, which is where the price is now. The short term, there's this little bit of this decline, but it's all yada yada short term stuff anyway. And let's now transition into that of gold. G1, GC1. And then we'll do the ratio after that. Okay. So in the daily time frame, this thing has just been fantastic. Now, which one did I have the Fibonacci? Don't tell me don't think I deleted it. No, it'd be here. Yeah. These are the numbers that I want to go over. It's almost at the point I'm going to have to delete them, which is cool. I kind of want to, actually. I really, really want to, because what does this Fibonacci represent? It represents the retracement from this high to this low, which I'm not going to delete it because I need to see a clear break above it. because we still could retrace these levels, because previous levels of resistance I'm always looking to be that of support after breaking it. But how well has that been the case so far? It makes a break to 1522. It does not go back to 1320. It makes a break to 1670. It does go back to 1520, but that's it. And then it breaks the 1670. And it has this next little smallish level I put in at 1779. Obviously, it just crushes that level. And then when it crushes it, ooh, big move. And you can see that was just a horrible level to put there. Look how it crushed it. No, it's actually a fantastic one in the sense that if you don't get resistance where you're supposed to, expect a very usually fast, concise move to next key. And that's exactly what happened. Now, I don't got a line at next key, but I could have. It's just right here, this previous high, 1920. And that's where it's at now, piercing extra, 1956. So therefore, since I've already got my lines on this, let me just put another one here. And just assure that's around 1920. That'll work. And when we take a look at this even more on the short term, there's a spot where it makes it to previous high for the first time on the 15-minute term time frame. No resistance at previous high. Okay then, and it breaks it. Look how on the 15-minute move for gold, it goes up 0.5% in just a 15-minute period. And of course, a little more overall when you consider the period before was 0.13 and this one was 0.28, and then it did extend up to 1944, establishing what that first became new all-time highs nominally in gold. And then a short-term correction, and then it retests it back down. Oh, how much you're establishing and strengthening resistance at 1944. And then, you break it and a concise, clear move. And now we're just new uncharted territories. And we've now established a level of 1981. You look for the range of 1940 now, even down to the fit to this key previous high at 1920. Let's go like that, because that's more of a precise area, whatever on that number. And you come back to it, support it. Okay, you did not support this level for a bit. You congested and stayed within it, but after that, you come back, and now we're in retracement from this low to this high on a short-term level. And the story is retracing really well. And interesting, this is cool to see something like this on the short term. Ooh, this is an interesting setup. What the F is going on with this move here? And what that is poising out to be a failed breakdown. And this is cool. I mean, you break down a key level of support. Now, I didn't plan on talking about this today because this is just happening. And I actually looked at the silver chart in advance, so I'm going to do it. Yeah, I'll talk about gold without even looking at it. I mean, I do this all the time anyway. Ooh, so a failed breakdown move. And you see how it quickly just comes back in the 18 like this. Oh, it sucks if it pulls back because it's lower highing this, and it's just going to be what this statement was originally, breaking this support. Thus, we're coming back down and towards these areas here. And now that it does that. But if it goes up top and you see, well, we've already established this night here. It established 1941 or 44. And we've already established here at about 61, 62. So if this comes in, you start to see it holding and staying around 57 to 61-ish high, whatever in this area for like 2-3 periods. Oh my goodness, that's holding and staying above a level for a decent amount of time, yada yada kind of stuff. Oh, that's just an amazing type of setup. And then you start to see it break it barely. Okay, so now you're like, 1968, 45, 1970. Bye, before that 70 number. And then you're expecting it to break this 1979 high and go to where? Well, let's just take a look at this even further. I mean, what are we doing here on the 8 hour here? Well, what the F again is going on with silver? And well, it's just going up. And yeah, we got this fiat debt note currency in every single world. And how much of your world's currency was printed in the year 2020? And even before that, 2010, 2009, 2008, all that type of stuff, And And then you look at things like, I think something like the national debt for like 3 consecutive months went up like over 5% each month in a row. Like first time ever I've ever seen that. I mean, not just, yeah. I mean, whatever on that. So, and the biggest one, maybe more and more people being aware of what a fiat currency is, and even just little miscellaneous facts like currency. We'll call it currency. I'm not going to call it the money, bad word. At least when you refer that to such. But when your currency in your bank is in there, what is that? That's a loan to the bank. You don't know what it. Have you ever been to like one of those places where you get those quick little loans, as they call it, Money Mart, I think is what they call it. Oh, they use that bad word. But anyway, you get $100, $200, $300, and then you put those dollars in your pocket. Are those yours? You should consider. Now, of course, you got to pay them back, and there's a little bit of terms and conditions and such. But that's exactly it. There's terms and conditions. That's exactly why these fiat currency levels is not yours, and to get paid back. Well, that's your request. You have one of those cards of some sort. Maybe you go on the internet with passwords and such, and well, by golly, they'll let you. They'll pay you whenever on demand within like seconds, 2, 3, 4 seconds sometimes. It's funny when I say 2, 3, 4 because every time I use that system at a brick and mortar location and I put that red card in the machine and I finish off my password or code to put it in, I do 1 Mississippi, 2 Mississippi, 3 Mississippi, and such. And it usually gets to the 3, 4, and then there's the approved. And then cryptocurrencies, oftentimes it's there it is, approved. 1 second, 1.8 or 1.5. Anyway, as far as the 8-hour chart, this thing looks ready to go big over the last 5-6 periods. And what happened before then? Well, what happened before then was, we're in this sideways consolidation. I'm talking like John Madden when I say that, football legend in broadcasting and coaching. An analysis, that's why so you got like an action situation of something, and then you just have a big breakout. So you concisely break it on like the 21st of July and all of these moves. But here's what happens. We make it to this peak high on the 27th 18-hour stamp. Next period, it continues further down into the 18. It did not really go to anywhere to where it came from. It's not like that didn't happen before with that 1321. So that's just how it is sometimes. And a lot of times it seems with gold. So now it's retracement bowed back from this high to this low, and it's doing relatively well within such. Because the very next period, and within the next two, it really established resistance very well here. We got a high of, it says 1962 rounded. And this one is 1964. This one was 1962. And currently we're at 1957 for the high. So 1962-ish, 1963 is most certainly, well, like those years were just the whole London gold pool era. But the dollar number for such is is pretty big. And to me, it looks like how this is playing out, that it's going to break north of it and go significantly higher, and then take out this level of resistance and just continue what has just been a phenomenal trend thus far. Ratio time. The ratio is at 81. We were at 125 not too long ago. I mean, not that long ago at all. There's a 125 in here. Failed move, fast move. Sorry about that. Failed move, fast move. Yeah, breaking. This was a fantastic break and a fantastic sell-off if you look at it from this manner. And any ways you can able to profit from this, congratulations on getting this kind of volatility, because the gold to silver ratio volatility overall is pretty tame when you compare many other world ratios, which is pretty damn cool. But gold and silver do work together. And yeah, when gold goes up and silver goes up, usually silver goes up more. And it looks like that's where we're entering. This was like a intro. Gold takes the big bull market move early where it has fantastic moves, and silver just did like nothing. And now silver is having like 5-8% days, like 5%, well 12% days over like when you count like the better hours of the two. And you know what? Just for fun, we'll go back to the silver market after and see what the move was. How recently? How many percent move was it? Like just a few days ago, and how many hours? Because it was like it was like a 6, 7, 8% move, and then the next, and then it started off like 2 hours, and then next it was up like 6, 7, 8% again, which would have been like 10, 12, which of course was a big reason for during these 2 days in here when this went down 5.3 and 5.8. But just a fantastic, just failed move, fast move setup there. And when I see this now, this tells me that the wild moves is live to happen. I mean, this, when you do something like this in a bull market, okay, we have this high and it worked, we have this low. So there's a decent correction and you yodel around the way. Well, the must hold areas now, and we're at the second one right now, the must hold right now. First was this high, and anything of whatever like it did before, like meaning whatever. This was one of the whatevers because it would have been, yeah, hold in here. Yeah, okay, we held here, good job. So a very simple, like, okay, good would have been, okay, if you were to do this, that would have been, okay, good job, but it didn't, that's fine. So I'm not going to draw a line in for the next one because the line's already there. It's that current price at the red line. The amount of resistance that we've had here is fantastically, it's big. So if you get into a situation where I'm going to be talking about drawing this as a failed breakout. Ooh, that's when we start talking about playing into these levels here. Yeah, back to silver again. I want to look at that move on the short term. So we'll finish it off within that. And I might as well just for fun do the Canadian dollar because I can and I will. And this is retracement on the Fibonacci in here, which is retracement from, I would suppose, this low and this high. Anyway, as far as that move is concerned, I mean, what a move from here to here. That's just wild. This move here started at almost 31 and it resisted a high of almost 35. So that would be $4 on the 30. That's about 13%. This happened at 2200 hours. And this happened at 22 hours. That was one full day when you do it from that time to that time. But the other gain was just more fantastic. Like, what was going on with this one here? I guess we'll do it to this peak high. Because even though this is higher, not by much, and it took a lot of time to get there. So I'm looking for the best move in the shortest amount of time. I think I start from here. And the low or open was 27, we'll say. And this high is 30 2/3. 3 2/3. That's about 360 on 27. Okay, so 270 would be 10%. That's an additional 90, which is like a third of that. So that's 13% from 2,300 hours to in little less than one day, in 21 hours. It had that 13% move. But if you want to even have some more fun with this, from this high to this low, and it's better to use this on the daily at this point. How many days has it been since the really in here you can say like the low of like 24 to 34? That's like $10. That's like what, 40% now? And we're talking 40% since like July 6th, 7th-ish or so. So in the last 3 weeks, that is the gain. And for the and we've seen the big monthly moves. In the Canadian fiat, it's up 30.5% for the month after it made a monthly move 2 months before then of 1783, because the previous month was just a pause and just say, yeah, real move confirming it. And yeah, this whole failed breakdown here on the whole like March event. Well, what was going on in March? Yeah, we had a situation where they would talk. Like, what was the verbiage here? Like, the verbiage here was just all of these people testing positive and the whole panic situation. We're going to get the whole toilet paper costing how much type of world. And then we're going to be talking about all of this social distancing talk is going to come into play. Oh, the staying 6 feet apart, washing your hands 70,000 times a day. Those types of things coming in. And soon after that, they talk about the lockdown. Oops. Quarantine, self-quarantine, 14, I think it was 14 days or something like that. 10, 14 days was the early talk. Self-quarantine really, I mean, they still talk in the situations. And then the shutdown, the actual shutdown occurring when this was happening. And then, okay, slowly starting to get things going. And then we're back into phase. Oh, wear these masks over and over and over again. See, for me in masks, I don't go much out in town, and I don't see the masks that I should have wore when I used to wear masks back in the day, and that was factory work. 17, 18, 19 years old, working in a factory where I wore masks a little. And it was my fault for not wearing as much as I did. It probably was a mistake on my end as far as resulting in poorer health afterwards. But now it's in a situation where no matter where you are, you need to wear them. Heck, I gotta go in town one of these upcoming days. I'm gonna be wearing a mask for about 3 minutes. Yeah, that's just how it is. And I'm kind of using the same type of way as it was when I was 17, 18, 19, trying to avoid the situation. I don't see people wear the same factory mask that I was. I'd almost want to wear those actually better. It's so much easier. But I don't see those actually. I guess I don't go to a hardware store often. Thank you for tuning in, I guess. There's not really much more to say about that. But the whole reason why I'm saying that, no, I'm not. The reason why I'm saying that brought this up is because we're in these effed up times right now. Messed up for sure. And does this give you good fundamental of the world reasons why gold and silver could even escalate big time moving forward? And the answer to me that says, yeah, that's a check mark. I think all things would go. And again, that's the reason why. And the world situation. That's one of the big reasons, and how much debt has been created, and we'll see how much more continues amongst each of the world's central banks and fiat currencies, and how much loans they put out. We live in a world where if you get paid, your company will loan the bank in your name fiat currency. But again, anytime you want it, just ask the bank for it. You can even go to them and ask for it if you want. That used to be the common way, the only way. I can't say that. There were checks back in the day. I guess there still is checks today. But see, back in the way back times in 1949, 1975, and 1991, and 2004, and for most people, 2012, 2019, I guess. They had no idea about those kinds of things. Good thing there's movies like Hidden Secrets of Money on the internet. It was well before then when I learned. For me, it was 2007 it all started. And it started because some friend of mine was like, yeah, market trading. I got an idea for you. Look at this. You got the Dow Jones, the NASDAQ, the gold, and all these silver, and a bunch of other stocks, and even some other commodities. And I'm looking at these charts and thinking about the buying and selling and stuff. And here's a poker player who just wants to get out of the poker industry. I'm still a poker player at this time. I just barely play. And I'm very, very much interested in it. But because of that, and learning about gold and silver and the Dow Jones and shit like that, it was like, yep, okay. Well, first of all, the Dow Jones is starting to roll over at this point when we start to see it as we move into like October, November and stuff. And then I'm finding it situations like this world is messed up. I've already come to the 911 conclusion. It's new information to me about, oh my goodness, it's not what it was. That's months already in. I've already heard of a thing called colony collapse disorder, and that's just spreading me to a bunch of other stuff too. And now I've come across this thing about fiat currency. Now I've learned that name for the first time, probably late in 2007. And as we go into early 2008, a movie comes out. I think it might have been spring, summer, money as debt. And I already learned from other spots. There were YouTubers out there called people like Man of Truth, Vision Victory, that explained a lot of interesting things as we were in early 2008. And then it just came to me, realizing the fraudulent situation, and then the markets moved heavily and so on. Well, thank you for tuning in. Have yourself a great day. Bye-bye.